are finally hitting that 7 p.m. SGT mark or 11 a.m. UTC. So, good morning or good evening, depending from where you're listening in from, and welcome to the second round of series of our RWA panel where we talk about different stuff and different nuances in the RWA field with our partners and really trying to get industry experts in different fields of different aspects and uses of tokenization to come together and really just discuss the applications of tokenization, why it's such a hot topic and why it's on everyone's mind at the moment. And joining us tonight are our speakers and our panelists, of course, starting with our CEO and co-founder of InvestaX and IXSwap, Julian Kwan. Joining us tonight as well is Matrixdock's head of research, CC Lu. I think she was just talking about her report. I guess I'll pass her the mic later and maybe could dive a little deeper into that. And of course, joining us tonight as well is Kasu Finance's Luke Lom, founder and CEO, and as well as I believe Ronnie couldn't make it, but Jeff from OpenTrade. So I guess there's a lot of people here, new, fresh faces and audiences, and they would love to hear more about who you guys are. So maybe we could start with a little introduction before we begin. Um, why don't we start with you, Julian, and then we can speak from the order from which we were presented, just to keep the cascade going.
Yeah, great. Steph, good to see you, Luke, and Cece and Jean, rest of the team. Thanks for joining, everyone. I know everyone's really busy, but it's great to see the level of interest consistently growing. My name's Julian Kwan. I'm the co-founder here of IXS. We rebranded just recently because of a big expansion in the services that were offered above and beyond swaps. And our sister platform, InvestaX, we've been working hard in the RWA space since the beginning of the industry. About 5-6 years ago, we've been working to build key infrastructure that helps RWA issuers launch legally, compliantly, as well as investors buying and selling in a structured, sort of protected way. Our real focus right now is on sort of institutional assets. We have treasuries, money market funds, private credit. These are the RWAs. Gold. These are the RWAs that have really started to get traction. I think every single one I just mentioned there. We have some partners and speakers on the call here tonight to talk about those assets. Those assets have become really the first product market fit in a long 5-6 year trial and exploration through all kinds of different types of private market assets, mainly because for the stablecoin holders, we found a yield bearing instruments or high quality institutional assets that make sense to park USDT and USDC into, which is still the main um, payment rails to buy into these assets. I think we'll see a significant increase in volumes for all participants on the phone here on the AMA, I should say, because we're going to see this huge explosion of the digital asset market with multiple times more stable coins all looking for yield. So that's enough airtime, Gene. I'll pass it back to you.
All right, thanks for that quick introduction, Julian, and a slow intro to what this panel is going to be about. I will now be passing over the mic to CC so she can give a little brief introduction on herself and Matrixdock.
Hi, thanks for having me. Yeah, thanks, Julian, for extend the invitation and nice meeting everyone. My name is CC Lu. I'm the head of research at Matrixdock. Matrixdock is based in Singapore, and our parent company is Matrixport, which is a one-stop crypto, digital asset management. And Matrixdock was created for real world asset tokenization in 2023, and we were the first one launch short-term US Treasury bill token. Then recently, well, since last year, we launched a gold token called XAUM. So now, given the attention to the uncertainty in the world, and gold is continue making new highs, and yeah, so our gold tokens AUM really basically 6 times since I joined from November last year, from 5 million to 30 million. Yeah, so we just had a tokenized asset coalition based in New York issued a deep dive report on XAUM, basically, uh, putting our token as the benchmark for gold token designs. So yeah, later I'm gonna share more about our philosophy, our design, and also the utility of gold token basically in our idea is allow more people to hold investment grade gold, doesn't matter where they are. Our gold token is 99.99% purity LBMA accredited gold, so everyone can access the token and hold with their Web3 wallets. And in addition to that, there's DeFi applications, collateral, leverage, and dollar cost averaging services. So yeah, so basically yield generation potential for gold token, that's all pretty interesting, making, we call that gold renaissance with tokenization. So yeah, so that's basically a summary about basically what I'm going to talk about today, and I will pass on to the next speaker. Thank you.
Wow, thanks for that introduction, CC, and thank you for keeping the energy going. So, if you guys are just listening in, make sure to stay tuned and find out why tokenized gold just went 6x, 6 times, and we're just going to discuss that later on. I think Luke was just here a second ago, but while we're waiting for him, why don't we start with you, Jeff? So, Jeff is from OpenTrade, and he's just going to quick a brief introduction, and hopefully, we can get Luke back in and we can get this started.
Yeah, thanks very much. Good to be speaking with all you guys. So, yeah, Jeff Handler, the co-founder and chief commercial officer at OpenTrade. So, my co-founder and myself, prior to founding OpenTrade, we were both at Center, which was the joint venture between Coinbase and Circle that launched and governed USDC. And so, our, OpenTrade was spun out of that to offer centralized exchanges, fintechs, and neobanks that are building on stable coins like USDC and USDT, a way to offer real world asset backed yield products to their end users in a way that is completely embedded within their systems and processes. And it's just a really simple, easy to use experience for those users. On the back end, we work with our sister company, who's a UK regulated asset management advisory firm, to effectively source and manage a variety of different real world asset backed products. So, everything from treasury bills and EU sovereign bonds, money market funds, to things like private credit, trade finance, and commercial paper. So, yeah, really what we do is, to summarize, is provide centralized exchanges, fintechs, neobanks, anyone that's offering USDC accounts, the ability to offer their own real world asset backed yield products that are backed by a variety of different asset types, et cetera. So I'll wrap it up there maybe, and yeah, hand it back to you.
All right, thanks for that quick introduction, Jeff. All right, I guess Luke is still having quite a few technical issues before we join here, but all right, it looks like Luke's been able to join. Hey, Luke, how's it going? If you are trying to speak, you are muted. If not, I will continue this AMA panel. Okay. So just to keep the ball rolling here, and before we begin, we're going to try to switch it up a bit since we are a few speakers on today, and we want to try to keep this as engaging as possible. So, starting with our first question, what is the biggest misconception about RWA tokenization today? Why don't we start with you, Julian, and then we'll do it in the order of which I presented you guys.
That's an easy one, I think. The biggest misconception is that most people think that utility tokens of real world asset platforms are actually real world asset tokens, but they're not. They're cryptocurrencies. The best example that I can give is that IXS has its own utility token called IXS. It's the platform token. It operates like BNB token, like Uni token, but it's not a real world asset itself. Behind the platform, or once you register on the platform, you can buy a gold token or treasury token. That's an actual real world asset token. So that's probably the greatest misconception that most people don't really understand. I'll just leave it there.
All right, thanks for that, Julian. Yeah, Cece, is there anything you'd like to add to that, or just yeah?
Yeah, sure. I can add something. I think the biggest misconception is that tokenized asset is just a digital representation of real world asset. People are, or especially traditional finance guys, when they get into the space, they basically tokenize, their bonds and and everything. They think that is a format of an asset. But the reality, I think, what at Matrixdock, what we're trying to do, especially with the Gold project, is to bring new utility with the tokenized gold to make it more modern, make it more useful, and also make it easier for everyone to hold. So that's, I think, um, people are not really seeing. There's just so much more uh, you know, to enhance asset efficiency and capital efficiency with the tokenized asset. I think that is, basically the important point for, buy side asset managers, hedge funds, and all that to really understand, to truly appreciate tokenized asset. I think banks are getting into the space because they think it saves their operational cost. I think that's only the beginning of it, but truly to making a new landscape of liquidity with DeFi, eventually, DeFi liquidity and then, TradFi liquidity combined together. I think that's the more exciting part of it.
Great, thanks for that answer, CC. And I completely agree. I feel like tokenization goes beyond just operational efficiency and it actually has more utility, as you were saying. And we'll get deeper into that. But before I pass it over to you, Jeff, it looks like Luke's finally been able to join. Luke, why don't you give a brief introduction about who you are, and I'll pass the question back to Jeff and back to you after that.
Yeah, sure. Thank you. My apologies. I'm in Dubai right now for Token 2049 and just having a few little connection issues here, but I think I've solved it. So great to be here. Thank you so much for having us. I'm Luke Loam. I'm CEO and founder of Kasu. Kasu is a private credit lending platform, uh, a little similar to, I guess, Maple Finance, Centrifuge, Goldfinch, and other similar platforms. We do things a little differently. We're partnered up in a joint venture with a leading Australian fintech and software as a service provider called Apsium, and they provide accounting software services and practice management system integration. So billing systems and invoice management essentially for leading accounting firms around the world in the UK, Canada, Australia, and US. They handle about $3 billion worth of transactional volume. And adjacent to that is the ability to offer a financing model for these accounting firms and the clients of the accounting firms. So Casu was built largely with that in mind as a bridge between DeFi and the real world, allowing people to deposit their USDC stablecoins and have them lent to these accounting firms and clients. And these accounting firms generally don't lose money. In the 8 years that our JV partner's been operating, they haven't lost a single cent, which is a pretty bold statement when you look at the defaults and the loss rates of some of the premier RWA platforms in the approaching around the $200 million mark for the top four over the past 3 years. So lots of interesting things going on. I won't go too much into the details now. We can probably dig into it a bit later, but happy to be here. Thank you.
All right, thanks for that comprehensive introduction, Luke. And sorry for cutting you off, Jeff. So, for everyone that just joined in, the icebreaker question that we had before we got into to the panel itself is, what is the biggest misconception about RWA tokenization today? And I'm passing it over to you, Jeff, to answer that question.
Yeah, no, thanks. No worries at all. I think the biggest misconception is really surrounding viewing tokenization as the, means to an end, right? Where tokenization is kind of this panacea for, bringing these assets, quote unquote, on chain, where really that's just one small piece of it. the important thing in terms of actually, promoting adoption and unlocking new use cases and, really providing the utility value of this in on-chain ecosystems is all of the kind of stuff under the hood surrounding how, the distribution platforms, whether that's exchanges or in DeFi or others, are able to actually access these products and be comfortable and, trust in the fact that what's going on off chain, because there is an inherent off chain element to all these products, is being managed, both extremely professionally and in a transparent manner. So yeah, I guess to kind of summarize, I think the misconception is that, tokenization itself is an end, where I think it's really just a means to unlock access to, the benefits of real world asset yield investments, et cetera, for folks that happen to be operating on chain and holding stable coins rather than, um, you know, high net worth individuals that are using their traditional bank account. So yeah, I'll, uh, I'll wrap up with that.
All right, thanks for that, Jeff. And finally, with Luke, last but not least, did you want me to repeat the question, or
No, I
are
got
you good?
I got the question. Thank you. I'll give a short answer to this. I
All
think there's
right.
probably a common misconception that RWA is like a safe play compared to crypto. And I think in some respects it is, but I think people need to be sure of where their money's going and how it's being utilized. Often when it goes off chain, and real RWA means funds do go off chain. And I think that there are some RWA players out there that are claiming to be RWA, but really aren't. They're reinvesting into DeFi. I'm not going to name names here, but they're reinvesting into DeFi. They're buying some top tokens and staking them and calling that RWA, which it's clearly not. So if it goes off chain, obviously you don't have that attack vector with being on chain. However, you still need to look at where it's being deployed, how it's being deployed, what the credit underwriting assessment is, and everything else. And a lot of the time, you see these RWA projects bringing a traditional sort of finance lending model on chain with no real innovation. So I would encourage people just to do their own research and ensure they know where the funds are being used and how they're being used.
All right, thanks for that answer, Luke. And I guess it doesn't hurt to repeat that last time. It always make sure to check. All right, and I think we've discussed from I guess the misconceptions about smoke and mirrors, about the nuances about tokenization, utility tokens. Is that really an RWA? I think it's been definitely here the perspectives that our panelists have given, and I think it's high time we jump into the first real question here. So, again, to get everyone kind of understanding where our panelists are and where they're coming from and their expertise, why don't we take it a step back and the first question being, what real world asset are you tokenizing, and more importantly, why is this the right time to do it?
We stay the same order, Gene?
Yeah, let's stick to that.
Okay, cool. Yeah, I think just to wrap up another key point of the last question, I think the initial concept was just people launching RWA to raise money, and it kind of stopped there. But the other speakers have talked about, the added utility of trading or collateralization or multi-use case. I think that's the whole areas of growth and many deeper levels of the value of tokenization. At a holistic level. But for us, as you know, you're working on IXS, we wanted to build key infrastructure that helped any of these assets um, launch and in the right type of environment. So now we're fully focused on kind of B2B. We really just we got key partnerships with crypto exchanges and fintech platforms that want to buy these assets, but they don't have the licenses or the actual assets. So to zone in on the actual question, we've gone through the journey of tokenizing VC funds, startup shares, ESOPs, carbon credits. I think we've done a whole bunch of things over the last couple of years. I think the biggest frustration there was like a lot of these private assets, private market assets have not necessarily the characteristics of these assets haven't been dramatically improved or changed with tokenization. What we've seen in the last 18 months or a bit longer now is we've seen the the first real adoption of any scale into the Wall Street financial instruments that are being tokenized, which might disappoint some people. That's just where the industry's ended up, because essentially a lot of the stablecoin holders are looking for a balanced portfolio to crypto. Bitcoin, meme coin, highly volatile, extremely volatile, and then stablecoin, zero yield. So, and again, Bitcoin, meme coin don't provide any yield either. So what we do now, what we're doing right now is really just focusing on the core assets that are all the speakers here are talking about. I think we're looking at getting Luke's products up. The other guys we've already got listed. We've got a real demand from stablecoin holders to find yield bearing instruments or institutional assets to balance against the crypto and give the people what they want. So the treasuries, money market funds, etc. So that's sort of the benefit of Wall Street. I think there's still a play for the private assets. I think that just you need a bigger industry, you need a bigger ecosystem, more volume. Essentially, over time, you'll start to see, digital platforms, whether it's Robinhood or Coinbase, they'll have all these RW assets. They'll have the yield bearing Wall Street assets and the like, and then they'll have all the commodities. And then eventually we'll be able to get bigger private assets in front of these distribution channels once it's more growth. So we've gone, all the sort of the full circle from all the private assets now, just really focusing on the financial, publicly traded kind of assets, if you will. Thanks.
All right, thanks for that answer, Julian. I guess up next, yeah, Cece, if you'd like to add anything to that.
Yeah, sure. Happy to. So I just send a message onto the chat, and everyone can perhaps have a look. And if you would like to help us to retweet, that would be really, really appreciated. So basically, we're gonna more focus on the tokenization of gold. So just a bit of obviously gold is a very kind of in the headlines in the news because it's a politically neutral asset, great hedge against basically inflation, and as well as geopolitical uncertainty, and also central banks are basically shifting some of their reserves in U.S. treasuries to gold because the neutrality nature of gold. So the demand is very solid, and also in the backdrop of weaker U.S. dollars, we believe a lot of things are supporting gold continue to go higher. All the big banks are putting the estimation for the price projection to be like $4,000 by the end of this year, and as I mentioned, since I joined from from last year, or end of last year to now, 6 months, our AUM moved from 5 million to 30 million. So so this is perfect time for gold tokenization to taking the spotlight in a way. Basically our gold token is one-to-one backed by 99.99% purity LBMA accredited gold. We have a very robust refiners network, so we can source from refiners directly. As at the couple months ago, when there's more and more physical gold like shipping from across the globe to New York, we were able to still fulfill, like one single day, fulfill $10 million of gold, physical gold. So yeah, we so our gold is securely held in Brinks vaults and the Malka Amit. So these are all very reputable reputable like vaults, and we have a quarterly audit, and in addition to that, we also allow users to see the reserve live. And then recently we just demonstrated the physical redemption of XAUM to physical gold. So basically, the redemption for our gold token starts from 1 kg, which is a lot more practical compared to 12 kg gold bars, so different sizes. So our gold bullion is from 1 kg. So the users or investors can redeem in Singapore and Hong Kong. So that's all pretty cool for more of a traditional gold investors. And our philosophy of the token is to make sure the gold reserve is transparent and also kind of enhance the capital efficiency and asset efficiency. What I mean by capital efficiency. So as you said, the gold price predictions, obviously general trend is going up. And we just a couple of weeks ago, we put out a spot gold leverage strategy, which means the investors or users of XAUM, they can collateralize their gold token to leverage up to 5 times. That is not just exposure to the gold prices, but also by the end of the trade, if everything goes well, they basically can accumulate their gold position. I think that's a pretty cool feature, given the world is in a quite of a messy place. So physical gold ownership is quite important. And also said, we basically allow Web3 users to be able to invest same quality gold, doesn't matter where they're from. So that is pretty unique because not everyone can have a brokerage account to access gold ETFs. Not to mention gold ETFs is not direct ownership of gold. It just a share. So I would think our gold token really enhance financial equality and also inclusivity. And in addition to that, for the DeFi players, we believe one side you can hold Bitcoin, the other hand you can hold gold. That's a great digital asset portfolio. So both are politically neutral. They kind of have a different risk characteristics. So you can hold in your crypto wallet both gold and Bitcoin. That's pretty neat. And we're also working on yield generation for the gold token. People the DeFi natives, they can basically use DeFi protocols to generating yield, but eventually we're going to provide more of a CeFi services that helping investors to earn yield on the gold token. So our gold token is live on InvestaX. Thanks Julian for having us on there. So that's accessible for CeFi investors as well. So that's basically there's a lot to talk about our gold token. That's why I shared that link. There's a very deep dive into the design and the utility of gold tokenization. So welcome everyone to have a look. It'll be a lot more comprehensive than what I can cover here.
All right, thanks for that, CC. As she mentioned, just go ahead and check out those links, Guy. I'm not gonna add too much into that, just to keep the ball rolling here. I'll pass it over to you, Jeff, and then we'll have Luke last to answer the question.
Yeah, sure. Sounds good. So, I'll keep it very simple. So we allow our clients, so these are our businesses, centralized exchanges, neobanks, and fintechs, access to yield products that are backed by investments in money market funds. So specifically the Fidelity Institutional Liquidity Fund, as well as the Franklin Templeton Fund. Directly into US Treasury bills or into EU sovereign bonds. And then we also have a BlackRock high yield corporate bond ETF backed vol. Then the last category is basically our bespoke treasury management products, where I believe it was Julian pointed out that there's a number of good private credit assets out there, right? So things like trade finance, supply chain finance, but typically these do come with things like, term constraints. So, 1 to 3 month tenors, and no secondary markets to, tap liquidity in the meantime. But again, these are, typically from what we can source, very high quality, and, really good risk adjusted return products. And so what we do with certain larger clients, who also, because they're using OpenTrade to manage their own retail facing yield products with kind of, unpredictable and high volume in and outs, is create a bespoke portfolio based on the amount of liquidity they need. So, weighting that towards the extremely liquid products like the money market funds, which accrue interest daily, and can be withdrawn same day, with other things like, for example, a 3-month trade receivables program that can generate an overall higher return than just the risk-free rate, but also give them that balance of the ability to, for example, withdraw a certain amount same day, without being locked into a certain term. So yeah, we so really it's kind of running the gambit from treasury bills and money market funds, extremely low risk liquid stuff, to even bespoke products where we're mixing in things like trade receivables or commercial paper, other assets like that, as part of an overall blended treasury management solution. Yeah, and the last thing I'd say is that this is being used today under the hood by a large amount of fintechs in Latin America. So folks might have heard of Lidio, which is the largest neobank in Colombia, Belo, which is one of the larger digital asset exchanges in Brazil and South America, Buenbit, and a number of others. And yeah, so for them, they use OpenTrade on the back end to generate these returns, and then on the front end, their users have a really simple user experience where they see a yield pot or an earned product, whatever they label it as, allocate a certain amount of USDC or USDT, and then boom, that's it. They start earning interest, and their provider manages everything with OpenTrade in the back end.
All right.
Alrighty.
Thank you for that, Terry.
I'll
Yeah, go ahead,
keep
Luke.
rolling. I'll keep rolling through, Gene. No worries.
Yeah,
Thank you,
go
buddy.
ahead.
Yeah. So look, we're focused on private credit, and we see this. If you step away from RWA and the whole blockchain experience for a minute and just look at the traditional finance markets, private credit's really exploding, and it has been doing so for some time now. I think it's around, depending on which figures you look at, around 1.7 trillion globally. Sort of banks are stepping back, non-bank lenders are stepping up, borrowers are looking for faster, more flexible capital. And so we've actually been speaking with major institutions, like in November, I was in London, met up with Goldman Sachs and Citigroup, Fortress, AB Carvel. We actually received term sheets to the tune of around $350 million for senior debt, and up to $500 million with other expressions of interest, which is a really, really strong sign that the TradFi space is looking interestingly at this. But the reason why it works for us is that we essentially source subordinate debt from DeFi lenders, and the institutions provide the senior debt, which is a really good match because the borrowers get a lower blended cost of capital. DeFi lenders get access to high quality lending opportunities that have generally passed due diligence with some of the biggest credit firms in the world, like AB Carvel and so on. And our first pool delegate, Absium, which is this fintech software as a service provider I mentioned before that's lending to accounting firms, is the first example of that. So we're signing this week a $40 million senior debt facility, which will scale into AB and then sort of on from there into the 9 figures as senior debt, traditional finance senior debt. And then all the DeFi lenders come into the capital stack as subordinated mezzanine and junior debt, which is what the TradFi guys want. Obviously, they need the debt underneath to secure them, that first loss capital, essentially. And the DeFi lenders are getting a higher yield for playing that role. So what we're doing is we're sort of creating a new capital stack here that brings TradFi and DeFi together in a synergistic way. And the other thing is because we're an agnostic bridge between DeFi and TradFi, in so much that Absium's our first pool delegate, but we are in conversations with other potential borrowers that want to come on board, that want to access this capital stack, whereby we can start in the sort of $5 to $10 million range for lending, assuming they have the ability to scale up their borrowing needs. As we start to scale, then we can introduce them to the traditional finance partners and have a sort of an introduction facility there, which brings the blended cost of capital down, helps them to scale the facility, and allows us a new revenue stream because we share in the delta. So if they're borrowing at 14% to start with, and as they start to scale up, that borrowing comes down to say 10% or 8%. Well, we share in the delta, and that becomes a revenue, a whole revenue model for Kasu as well. So it's fun stuff we're doing here. We're in, it's good stuff.
All right, thanks for that, Luke. A lot of interesting stuff here, guys. If you guys are just dialing in, we're talking about tokenization, but more primarily issuance and our partners, what they are doing today, what they're doing behind their platforms. So we've talked about tokenized private credit, tokenized gold, and tokenized treasury bills and trade financing, and basically anything under the sun. So now we're going to jump into question number two. I think a lot of our users here don't really understand how transformative tokenization is. If anything, it's just another buzzword. It just means, more utility tokens are gonna, moon, and it's gonna get us up there. But why don't we take a step back and really explain to our audience, like, what is it about your tokenized product that it's actually solving a problem that would have been a major problem if it was TradFi, right? Would have it changed infrastructure, risk management, compliance, investor usability? Like, how did tokenization move from a buzzword and actually increase efficiency, reduce operational costs, and basically, how are you guys using this transformative technology? And if you could just paint that picture for our audience.
Gene, why don't we let the product guys speak? We're infrastructure, but we don't
Yeah.
actually run the actual products themselves. So I'll give those guys the airtime.
Yeah, sounds good. Why don't we start with CC and then we'll take it from there.
Yeah, sure. I think the problem we're trying to solve is allowing more people to access to gold investment easier, and also making gold from a static asset to a productive one. So, and also more importantly is the reserve transparency to earn that trust and earn that credibility from, basically we need to have a paradigm shift for users and investors to say, tokenized gold is the future of gold ownership, right? So it's different from like paper gold, it's different from gold ETFs, where investors just happy with exposure to the gold prices. And again, with everything is happening in the world, to own the physical gold is becoming more important. And one is accessibility, right? So for people like us living in Singapore or other advanced financial jurisdictions, investing gold may not necessarily be a problem. But with the global south population, to own gold, many people have to do with gold jewelry, right? And then there's no secondary market, and then you pay a lot of premium with gold jewelry that erode the wealth preservation part of it, the idea of it. So yeah, so I think with Web3 wallet can hold standardized investment grade gold. That's great for financial inclusion, and also the yield generation, the leverage, the DeFi liquidity. We're very focused on building secondary liquidity for our gold token, because one of the big issues, and I'm sure everyone agrees, is that the liquidity for tokenized asset is a big problem, right? So yeah, so we're very much in full speed integrating our gold token into DeFi protocols. So we kind of cultivating the liquidity in the DeFi sector first, and then obviously when there's more CeFi and when we go on more of the crypto exchanges, we hope our gold token will be liquid in the centralized finance ecosystem as well. What else? I think I just stop there because I realized last time I spoke too much. I'll pass on to the next speaker.
Yeah, no, great. So I all fit the challenges that we're solving for into two buckets. So one is, usability and implementation of yield products, and then the second is real trust and transparency and security related to the off-chain operations that back a real-world asset yield product. So starting with the the first one, we built our platform to make it incredibly easy for a centralized exchange, fintech, or neobank to plug in their existing systems, processes, and operations into a platform that gives them access to real world asset backed yield positions on stablecoin balances. And doing this through things like making it easy to implement with kind of the main wallets of choice there, APIs to allow for easier reconciliation with other inventory systems they're using under the hood, and just product features like instant interest accrual, interest that accrues daily and compounds daily, and the ability to withdraw at any time with same day settlement. So, really giving everything that a exchange or neobank would need to operationalize this in a way that's not a headache and not a huge amount of overhead, and that can be really easily packaged into end user facing products, which for our clients unlocks entirely unprecedented access to stable returns on dollar accounts for at this point millions of users across LATAM who just categorically would not have access to these types of savings products without our partners and in traditional finance. And then so on the trust and security part, stablecoin yield products aren't entirely new. We saw a number of stablecoin yield products years ago with notable ones like Celsius, Genesis, and the ones there. And so the the issues there really surrounded trust and security. And so we, from the ground up, built our entire off-chain operating model to have, for example, a completely bankruptcy remote special purpose vehicle that actually manages all the underlying real world asset accounts. Having all of these operations conducted by a UK regulated asset manager who is legally required to operate the platform in the way that our users sign up to have it there. And then, really having just a built up network of tier one financial institutions, custodians, the corresponding legal agreements to make everything, completely, bank grade under the hood in terms of the actual off chain operations management and custody. And on top of that, just transparency, where for all of our clients, we provide complete transparency into the underlying accounts where everything is held, signed attestations from our asset management partner. And so I'd say we bring both of those together into a single platform that solves challenges in terms of implementation and usability, and also, importantly, trust and transparency into what's going on off chain.
You're speaking to the choir here, sing to the choir here, Jeff. We're all about transparency as well, and we think this is something that we're not really seeing enough of at the moment. And part of our pitch, in fact, I was at the Plume Ecosystem Day yesterday, and I think it was like the third or fourth slide. It's just all about transparency and the fact that most, as I said earlier, most RWA, you put your money in there, it goes into a black box. You don't know what's going on with the money. So that transparency is key. So totally agree there. Look, very quickly for us, I think there's like a three-way value proposition why tokenization works and where the blockchain fits in. And not to repeat too much, but I answered it partly in the last question, and it's really about the subordinated capital. So let's say you're a business that's generating good yields. You want to scale, you need to borrow. And you're looking for a lending partner, and you probably aren't scaled up enough to work with the banks, or you don't satisfy their criteria. And even with the private credit, non-bank lenders, perhaps what they often ask for is they want first loss capital. So if they want to lend you $100 million, That's great. They expect there to be 20 million coming from somewhere else. 10 to 20% of that needs to be coming from somewhere else, and that's what get hits first in case there's any kind of default or loss. So we're able to facilitate that. Not to say that the DeFi users are going to take the hit every time, but certainly we have very robust risk assessment processes. What we'll do is assess the quality of the potential borrower, run it through our sort of due diligence processes, and then we'll go and talk to our TradFi partners and introduce it to them. They would run it through their own DD process as well. Once that's passed, and they say, we're happy to lend to these guys, provide senior debt on the basis that they have their junior debt in place, then we provide the junior debt through our DeFi lenders. Essentially, the DeFi lenders get the higher yield, they get the upside. They also get the safety and security knowing that this has been approved, greenlit, due diligenced by some of the best in the space in the TradFi sense, and it helps the borrowers to scale their business and get access to the capital that they need. So it's a nice sort of virtuous circle there.
All right, thanks for that, Luke. I guess, yeah, Julian, passing it over to you if you wanted to add a few last words for that last question over there.
Yeah, I think a lot of these financial instruments are very, very complex. The goal, I think, for one of the goals of the tokenization is to digitize the offering, bringing more transparency, more portability, more usability. JP Morgan had a platform which just changed names. It used to be called Onyx, and it was tokenizing publicly um, available, publicly traded assets because in the format they were in, they couldn't be used for lending and borrowing and collateralization. So there was a use case just in that one. It's obviously a huge bank, but they found a use case even for something that most people think is already pretty liquid and usable because it's tradable. But the ability to then bring assets, real world assets that can be used to borrow and trade against is just enormous. It's going to be way bigger, in my opinion, than the trading volumes, and you can see that is kind of the basis of DeFi really, which is using assets and lending and borrowing them and getting, rewards or interest in, even if it is in other kind of altcoins. So, you can see that the kind of the bedrock of DeFi is not just trading volume, staking rewards, etc., restaking. That's all possible now for millions of more assets and trillions of dollars of value. So I think that then it goes to these like multiple layers of usability and why tokenized that the banks have traditionally done it to save cost, which dramatically increases profit, but they're now opening up their eyes to kind of where this is going. And then ultimately we're seeing the convergence of Web2, TradFi, Robinhood, interactive brokers type platforms that have all started adding crypto. The next evolution for them is to add RWA. And you can see the same thing on the DeFi side, Coinbase, crypto.com, buying broker dealers. A lot of crypto exchanges are illegally selling RWA today because they don't have securities licenses. They just have crypto licenses, but that'll run its course and they'll have to find a legal compliant way to do that. Hopefully more of them choose us. But the point is that everything is just coming for the digitization of real world assets. It's a much bigger asset class than the crypto will ever be. Not today, but in the near future, because there's way more real assets, and that's not a bad thing for crypto. That's just more use case. So the more assets that get tokenized, the bigger crypto gets, the more stable coins get minted, the more stable coins there are, the more buyers there are for RWA. They actually work in parallel, they work together, synergistically. So and they'll both help it to grow. But ultimately, I think that there's many benefits sort of on the savings sides. There's distribution capabilities that have never been possible before. So tokenized stocks might not be that interesting for anyone that can buy stocks in their phone today, but for billions of people around the world, they can't access stocks in Indonesia and Nigerians and third emerging markets and all these people. So there's new use cases for this. And then CC on the gold tokenization. Gold is obviously a very, very valuable asset class for the world. It's notoriously it's a gold bar stuck in an underground vault. It's completely useless outside of the fact that that's what it does. But if you can if you can still get that value storage plus being able to use it and then loan against a bond, and there's just another example. So much more usability is one of the key factors, and it's just very diverse and growing.
All right, thank you for those answers, panelists. So I like what I've been hearing. We talked about accessibility, utility, and one of my more favorite words, regulatory compliance or transparency, which would have been perfect for our next question, but it looks like we're kind of short on time here. So to wrap things up and kind of get everyone up to speed, we've been talking with our partners about what it is that they're issuing, what they're putting on the blockchain, and what is for. I guess the last question is, and for everyone in the audience, is where can we access these RWA products? Are you currently distributing only to institutional investors, to retail? Why don't you paint a picture of how we could actually get a hold of these tokenized assets?
Well, Gene, I'll just throw it in there. As you know, IXS was one of the first in the planet to get a retail license, so you can turn up with a photo ID, that's it, and you can start to buy RWA. That was our mission from day one, which we've been able to achieve. Not all assets welcome retail investors. We're working on some structures, and essentially fund structures that allow retail investors to pull together to then go buy an asset that's only available for accredited or high net worths. Most of the RWA in the world today is only available for accredited high net worth investors. Um, that's just the nature of how a lot of these assets are structured. But yeah, there's more and more issuers and platforms like us trying to offer solutions for that. But that's it from me.
All right, thanks for that, Drew. And I guess, yeah, Cece,
Yeah,
pass it to
sure.
you.
Yeah, very quickly. Yeah, our XAUM Gold token obviously is live on Julian's InvestaX platform, as one of the CFA platforms, as well as Matrixport, our parent company's app. And if for because it's a gold, and we can do like primary issuance as well. Means we mint gold for our investors. So that is through our Matrixdock platform. And in addition to that, for the secondary market, XAUM is available on PancakeSwap, on Uniswap, and also all other DeFi lending, borrowing lending platforms. Like for example, XAUM has a 93% LTV ratio on Curve, and the 70% on Kinza and Morpho and Avalon. Yeah, so these are just different ways to access XAUM. And in addition to that, our token is in two formats. One's a ERC token, which just means obviously fungible, and also NFT format. It's quite interesting. Comes to the transparency on our website. You can actually have a real-time lookup for the reserve transparency. So, for example, if an investor has a one single Bullion NFT, they can see the Bullion number, in which vault, from which refiner. So everything's live. And with a just ERC token a format, you can see large size or smaller size of holdings. Like each XAUM, it represents 1 troy of gold, and obviously 1 kg gold equals 32.148 troy of troy. So for one single gold bullion, in our lookup, it will be 32.148 XAUM. That you can see that particular wallet holds one single bullion. So it's pretty cool. So encouraging everyone to have a look. And that's from me.
Yeah, I guess it's over to me. So, yeah, OpenTrade is a B2B2C business. So there's actually a wide variety of centralized exchanges and neobanks where users can get access to stablecoin yield that's powered by OpenTrade under the hood. So examples of that are WooX, which I'm sure folks will be familiar with. Lydio, Buenbit, Bello, Trax, and a number of others. And we're also working with our friends at IXSwap to, look at something there. So watch the space, and available to accredited investors via InvestaX as well. Short and simple. And obviously on our folks can check out the OpenTrade website as well for a list of specific outlets if I may have missed any.
Thanks, Jeff. Okay, for Kasu, we are open to anyone, anywhere in the world. You do not need to be an accredited investor. You do need to pass KYC, however, and as long as you're not from a sanctioned jurisdiction in North Korea or somewhere else, you can be in the States, you can be in Australia, you can be anywhere, and you can access Kasu between sort of 14 to 25% yields, uncorrelated from the crypto market and largely uncorrelated from the macro markets as well. And these yields have been DD'd by some of the biggest firms in the world, like I mentioned. So it's good stuff. We are actually going to be doing a but there are rumors that a liquid wrapper will be created so that you can access these yields as well without the need for KYC. That'll be coming in a few months, I believe. So yeah, go and check out Kasu.finance. Follow us on Twitter. Keep up to date, and we look forward to having you on board.
All right, thanks for that, Luke, and thank you for wrapping it up for me. Thank you for joining us again tonight, guys. Don't worry if you guys just joined in now. We will be posting a playback and a written recap of our AMA panel, and as well as some links from our partners, so do make sure to check them out. And that is a first of our series for this quarter. Thanks again, guys. Thank you for joining us. Have a good one.
Thank you.
Awesome. Thanks, everyone. Thanks,
Thank
Gene.
you.
Appreciate it.
Thank you.
Thank you.